All right. So this is typically the type of garbage you get from the financial media. And of course, all these clowns on YouTube, they just watch the financial media because they don't have a clue what the hell's going on. They're just a bunch of scammers pretending to be experts. And you'll see this typical garbage. So we're going to show you here. Wow. Look at this. Buffett versus the S&P. Okay, great. This is typically what you get. Let's take a deeper dive. You see, I look at things closely, folks. That's why I'm the best. Okay, so we're going to take a look at some you can see the S&P here. Now, let me show you the image. Now, before we get into Buffett's performance over the past 20 years, I want to show you an example of why the media promotes Buffett all the time, tells you he's so great, because they use him to promote other things, and that means more advertisement revenue. Buffett this, Buffett that, Buffett this, Buffett that. You never hear any criticism of Buffett or Berkshire Hathaway. It's all about promoting somebody as a god so that you line up for the next interview, the next book, the next video on Buffett to make money. The media is exploiting you. So you can see here this chart. Let me this chart shows the performance of Berkshire Hathaway versus the S&P 500. This is yearly performance. Jesus. And so what do you notice? What do you notice from this chart? Well, you should notice what I've been saying now for quite some time. Buffett made most of his money early on, in the 60s, 70s, 80s, and even to some degree in the 90s. Okay? But take a look since 2000. Take a look since 2000. The S&P is the purple dot. Okay? See that? So when we look at this period, you see, folks, this is very instructive because people just are superficial. He's a billionaire. You're not. Right? The lack of logic, the stupidity. This is why I don't engage with people. This is why I don't have comments on my channel, because of so many stupid people flapping their mouths. When I was young, you learned not to flap your mouth. When you flapped your mouth, you got fucking schooled. You got humiliated, and you shut your fucking mouth, and you learned to not always flap your mouth thinking that you know everything. These days, of course, it's a different story. Everybody flaps their mouth like they're an expert because they all have Dunning-Kruger. So I don't have time to argue with or educate people who don't have a very basic level of, it's not even critical thinking. It's just kind of common sense, to be honest with you. I mean, I can't help you there. Go to Tony Robbins. He'll be your life coach. So just take a look at this. So what was going on in this period? Folks, this was a period when Warren Buffett made most of his money in private transactions. These were private market deals. In fact, Buffett's most powerful investment tool today in Berkshire Hathaway is actually a private company, Geico. Did you know that? Have you ever heard anyone say that? No, because people are fucking stupid. Geico is a private company. It's an insurance company. And I believe, to be honest with you, it's somewhat of a scammy company. Their marketing is a little bit scammy. Their practices as well. I've dealt with them, and I would not fucking be a customer with them. I don't like the way that they operate. But anyway, that's not the point. The point is that Geico is arguably the most important investment component of Berkshire because it provides the constant cash flow. You see, that's the vital importance. Of course, there's many private companies in Berkshire that provide cash flow. Cash flow is very important for Berkshire because Buffett basically dollar cost averages, right? And if you have continuous cash flow, that strategy is more effective, you see. But anyway, back in the early days when you can see he significantly outperformed the S&P. These were private transactions. Many of these were private transactions, private deals, first of all. That's an important point. Why? Because the S&P is not an accurate benchmark for private deals. How come you never hear that? This is common sense. How come no one's ever said that? Show me where someone's ever said that. Now, of course, I'll be copied like always and not get any credit like always. Second point. I lost my train of thought. Oh, and by the way, this is where Buffett excelled because his method of valuing a company is more accurate, it's more successful, and the types of companies that he values are typically value type of companies, value-oriented companies. It seems like today the definition of value investor has been whored out. It's been destroyed, similar to the definition of a boglehead, right? People have distorted that definition. They have deviated from that definition. A value investor invests in value type businesses. The end. It's that simple. Value investing, and I've mentioned this before because Paul of Everything Money seems to think that any stock that he buys, as long as he buys it at a price lower than what he feels is its intrinsic value, he believes that's value investing. No, Paul, that's not. That's fucking ignorant. Value investments and value investing, they have a specific business dynamics which are more favorable for traditional valuation methodologies. You see? So discounted cash flow analysis is better for private transactions. It's better for more value-oriented companies. Okay? For instance, as one example, public transactions, public market transactions where there's an auction, discounted cash flow is really not, it's just not really applicable for the most part. Companies with a high level of not only technology assets, but even intangible assets, discounted cash flow, throw it out the fucking window. All these guys on YouTube using discounted cash flow are fucking clowns. I'm telling you. You can write it down. Okay? Write it down. I mean, folks, and let's just say, spread the videos. Put more pressure on these fucking clowns. If I have 1 million subscribers, people aren't going to what are they going to do when I'm coming after them, even? They'll still be too afraid to say shit because they're not qualified. They're chumps. I mean, that's the reality. That's the fucking reality. And I only mention this because I don't like to brag about myself, and I don't do it. I only mention this because it's important to know who you're listening to. Who are you listening to? What is their qualifications? How are they qualified? What are their credentials? What have they done? And then what are their motivations? Motivations are important. I have zero motivations. Not monetized, not going to build a channel. I'm about the truth and have been. I have been. Ever since I began this journey many years ago. And I sacrificed a lot for that. So I know the deal. So anyway. So you're looking at private transactions out of the market. And also there was very, very little competition back then. Very little competition. So think about it for a second. First of all, you're using a metric, the S&P 500, which is not an applicable benchmark. It wasn't an applicable benchmark for Berkshire during this period, and it's not an applicable benchmark, by the way, today. It's the write this down. The S&P 500 is not an accurate benchmark for Berkshire Hathaway, even today. Why do I say that? Because it's more of a private equity type of fund. To be honest with you, it's more of a private equity type of fund. The final thing I'm going to mention about Berkshire, as I've talked about before, nobody wants to talk about these things because most people are too stupid to realize them. Although it doesn't take a genius. Berkshire Hathaway, if you look at the top holdings, they're dividend-paying stocks. The top publicly traded holdings, anyway. Dividend-paying stocks. Berkshire Hathaway, Warren Buffett, is known as a value investor. Therefore, Berkshire is a value fund, right? Value investing almost always implies the payment of dividends at some point. At some point. Berkshire's been around long enough, it's safe to say it should be paying a dividend. It doesn't. Right? Everybody follow me? Why is that? Because Berkshire wants to cheat the system. Buffett wants to game the system. He wants to reinvest all the dividends that should be going to his investors to make it to basically distort the performance. So, in other words, when someone uses the inappropriate benchmark of the S&P to measure the relative performance of Berkshire Hathaway, once again, inappropriate benchmark, you never see a chart of the S&P versus Berkshire with S&P 500 dividends reinvested. You see, that's critical because the performance of the S&P would be much higher. That's how Buffett cheats the system again. Right? Think about this stuff. So I'm going to show you now. I mean, folks, remember, you're not hearing any of this stuff, and this has been going on a long time. You've never heard from anybody. Why? It tells you got a lot of idiots out there. A lot of fucking idiots. And look, whether they're idiots or they're dishonest, doesn't matter. Because either way, you're getting shitty information. Right? They're all fucking idiots. Everyone's a follower. Right? So typically you're going to hear someone say, well, gosh, this guy said Buffett's overrated. That's as deep as they can get. They can't look at the argument because they're that stupid. Same thing with Michael Burry. Show me Burry's performance. It's been abysmal. Okay, remember, I'm the guy that made the greatest call, probably, ever, in the financial crisis. Not Michael Burry. Not Kyle Bass. Not any of those guys. You understand? And I'm banned. They're promoted. Why? Well, ask yourself who you're going to do better from. If I'm promoted and people hear from me, or if you're getting info from Michael Burry and Kyle Bass and Jim Rogers and Mark Faber and Peter Schiff. You understand? Once again, if the media can create the perception that they have experts with great track records, and they're going to interview those experts the sheep will line up to hear how they can make money. But if those so-called experts are actually broken clocks, contrarian indicators, and or frauds and con artists, then you lose money listening to them. And if you lose money listening to them, you're going to become more desperate at some point. And that means that as you watch the content, eventually you're going to see an advertisement from Merrill Lynch or Morgan Stanley or whomever in the financial industry. And you're going to call them because you're desperate. The media intentionally airs jugheads in order to make more money off advertisement revenue, right? Advertisements are more expensive if they're getting a higher click rate. And the advertisements are getting a higher click rate because the media is airing a bunch of bozos who are steering people into the gutter. And those people get desperate and they call up the advertisers. You understand? That's how it works, folks. And even when Warren Buffett, who's a credible investor, no doubt about it, when he comes in the media, which is not that often, but they'll throw him in there to get more views and make it look like they're interviewing experts all the time. Warren Buffett never helps you, does he? He never helps you. How's he going to help you? Of course, he knows the media's a scam. He's not going to say it because he's getting free marketing time for his fund. Yes, Mr. Miller, you're absolutely correct. I actually have charts to show that. This is so you're going to see. I mean, I followed these guys for many years. You'll see the data here shortly. See, Mr. Miller, you're one of the few people actually, I think, who realizes that. Because what are you hearing right now in the media? Oh, Warren Buffett, yeah, he's got Occidental. Wow, oil's going up. Da, 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 da. They forgot that Warren bought Occidental. He piled in 2019 at like $60-some. You see, right? But so what you're hearing from the media is only the latest, greatest. You see, this is what the media does. That's their specialty. And remember, all these guys on YouTube are getting all their information from the media. So, as said before, I mean, as bad as the media is, at least if you're somewhat advanced, you can actually learn the game in the media and you can make money if you understand how the game is played. But YouTube, you will never make money. There's no fucking way. It's a complete disaster, complete disinformation, all frauds, con artists. There's no game. It's just complete fucking bullshit, dog shit. Because remember, part of the media, part of their game is manipulating the audience. So their buddies can game the system. Remember, if the media creates more dumb money, right, Wall Street is going to be happy for two reasons. Why? Number one, Wall Street is going to be able to get more customers ultimately because the media's made more dumb money, caused people to lose money. People are going to get desperate. They're going to line up and call up Merrill Lynch and Morgan Stanley. Those advertisement slots are more valuable now because they're more effective. And the second way Wall Street's happy if the media creates dumb money is because Wall Street actually games the system. They've got the media who's put all the suckers that watch the media on the losing side of the trade. Wall Street takes the winning side of the trade. Just like a great example, as I've talked about many times, no one else has said this because they're too fucking clueless on YouTube. They don't know. And that is this whole Reddit meme stock thing. The media is telling everybody, yeah, look, the kids have made it. The Reddit people, Wall Street bets, they're making all the money, they're destroying the hedge funds. Yeah. That's the theme that the media wants people to think. Because that perpetuates this whole notion of, yeah, you can do it. You don't need Wall Street. You can make the hedge funds go bankrupt. And that's just not true. The hedge funds are making a shitload of money off this meme situation. In fact, in one of the portals that I provide for advanced customers, where we discuss securities analysis, distressed securities, trading opportunities, I actually, a couple of months ago, I actually prompted investors to Bed Bath & Beyond. Now, Bed Bath & Beyond is a stock that I've covered over the years, and for many reasons. And I prompted them when it was $5 and change. I said, look, watch the whole meme thing. This could be a short squeeze. And there were people that made a lot of money off it. FYI. But my point is that the reason why I'm telling you that is because I explained to them how it works. As a matter of fact, let's go ahead and pull up a chart. This is not related directly to the whole Buffett thing, but let's just go ahead and I'll go ahead and show you while I'm talking about this. Let's see. Jesus. Okay, here we go. I'll go ahead and show you here. Bed Bath & Beyond, just to give you an example. I explained how this meme stock situation's working because people don't know. They're just fooled by the media. The media wants these people to think, they want the little guy to think that they can beat Wall Street and they can destroy the hedge funds. Why? Because, folks, that brings more dumb money into the market. You understand? The media is gaming people, just like Robinhood gamed people. And everyone on YouTube selling affiliate links for Robinhood, promoting Robinhood, gamed people without knowing it, of course. But even now, there's some people that know it that don't care. Telling people that, yeah, Robinhood, steal from the rich, give to the poor, democratize investing, no commissions. They didn't tell you that they were selling your order flow to fuck you, right? So here's Bed Bath & Beyond. Okay. So here's where I prompted people, I think somewhere around here. And in fact, I had another session. I prompted them here. I said, look, it's going higher. This is just beginning. I mentioned that this phase here, this is kind of the initial bump. So the initial thing may or may not be a meme catalyst. In other words, it might be a meme catalyst or it might not. It kind of works how, for instance, how the when you hear about all these like terrorist activities, sometimes it's the Taliban, sometimes it's the CIA, right? The CIA will do things oftentimes to inspire, the Taliban. So if the CIA pretends like they're the Taliban, it'll inspire other members to do things to perpetuate the situation, to validate military activity. That's how it works. You all understand that, right? Similar situation with Wall Street, the hedge funds. What they do is sometimes maybe there will be a meme stock. Some individuals will go and they'll say, hey, we're going to buy this. Okay, they'll move the stock up. But because there's already a precedent for that operational model, sometimes you'll have actually hedge funds that will come in and start to move it. And then they'll talk about it. The meme people will talk about it on the forums, on the chat boards, and say, yeah, we're starting to move. Look, it's starting to move. And then they'll jump in. You see, so that doesn't really matter who starts it at this point. The point is that once it's started, boom, then all the suckers start to move in. Okay? And oftentimes, say after this period here, it's going flat, probably funds will come in to pump it more. Why? To lure in all the suckers. It's kind of like how the cryptocurrency thing worked, right? Remember when everybody was pumping it, and to the period when, like, you heard about Bitcoin every day, everywhere, everyone was talking about it. You knew, well, if you didn't know, you maybe learned that probably, the peak was in, right? Similar situation here. So you're getting basically, and this is generally how it's working with these meme stocks. The media's not going to tell you this, largely because they're idiots, they don't know, but they have connections with people that could explain this if they know. I'm assuming people know. There's no doubt in my mind this is what's going on. You'll have the funds come in again to really light the thing on fire, where it's every single sucker. They've seen it go up and up and up, right? So in other words, without the funds, this thing could have died after this period here. But the funds reinvigorated. And then you see the volume. Boom, boom, boom. right? The funds are making all the money. The funds are making all the money. Not just funds, by the way. Let's not forget, Mr. Cohen, the supposedly activist investor, which he's not an activist investor, he's just a fucking scammer. He was the guy pumping the stock up. He made a big profit. He ditched his shares. He made money off of these Wall Street bets guys. You see? They were betting on him. He fucking, he gamed their asses. Just like that Aaron guy, that clown from AMC. He gamed all these people. That's what's going on, folks. No, Wall Street bets, kids, you're not winning. You're losing. But you see, the media is going to tell them that they're winning to suck in more dumb money. You understand? So, let me get back to the main point here. Back to Buffett. So let's take a look now at, let me see. Yeah, so I've got so much stuff on this. This is from the three jugheads here. You know, they were going to come in and transform healthcare, and I said it's not going to happen. Back in 2013, everyone, oh yeah, they're not going to do shit because they don't understand how healthcare in America really works. So here's just a piece on Buffett here, in case you forgot. I'll show you the performance here in a second, but let's take a look at this here. This was done, a while back. Let's not forget Buffett lost $30 billion in the financial crisis. He also had insider information for the taxpayer bailout. He invested in several stocks that were bailed out without disclosing that to the public, yet he came out national TV and told everyone to support the bailout. Right? Remember that? Also, you might want to look into General Recor investigations prior to the financial crisis. Buffett was called in front of Congress along with Ace Greenberg, I believe, of AIG, and Buffett walked away silently without any problem. Yeah. This is he's involved in insurance, right? And insurance there's a lot of scammy stuff going on in the insurance industry, as you all might appreciate. Warren Buffett's, of course, his IBM disaster. How long did it take Buffett to realize IBM was down the tubes, right? How many years? How many losses? Kraft Heinz. Do I need to say anything about Kraft Heinz? How can you be an investor in two blue chip companies, Kraft and Heinz? How can you be the greatest investor ever? And you're dealing with companies that you focus on, companies that you're able to value with your own methodology, because these are value-oriented companies without a doubt, as much as what exists today anyway, right? And how can you have 1/3 of the ownership, and then along with your business partners, 3G Capital, combined, how can you have 2/3 ownership in this deal and fuck it up, and completely fuck it up, and you're the greatest investor in history? Really? Does that make sense? I mean, that call alone, you don't make these types of blunders. Think about it. 2/3 ownership, you control the whole company. You control the entire company, right? Think about this. That alone discredits Buffett. But there's many other examples, right? The problem with Buffett is that he's living on old times. What Buffett would do early on, when America was just forming when you didn't have the domination of the international corporate giants. You just had, 50 years ago, you had Coca-Cola and McDonald's, and of course, Buffett's not a McDonald's investor, which is should raise another red flag. I've talked about that before. he thinks that he thinks that this is Buffett does not understand intangible assets. He cannot appreciate and value intangible assets. This is his downfall. This is absolutely his downfall. And when you're dealing with intangible assets, it's not just technology-based assets. You're talking about brand name, right? Brand. And this is why Buffett, for instance, he invests in Dairy Queen. Because what Buffett does is he thinks like, oh, okay, McDonald's is the leader. I can get a better value with Dairy Queen. Honestly, that mentality... Hold on a second here. Hold on 1 second. I've got somebody at my door. Hold on. Hold on. Hold on a second here. All right, not so bad as I thought, actually, folks. Everybody with me? Sorry about that. Sorry about that. I'm in a new place, actually, and I just got my laundry delivered to me. I didn't know what the hell was going on because there's supposed to be some things going on here. I've got some modifications being made to my place. Doing it today, which would not have been good. So, just my laundry. So, getting back to Buffett. And you'll see here, of course, his Occidental Petroleum fail, right? I'll show you that here in a second. Folks, there's many things. Think about it. Buffett's 40% or so in Apple. A fund is, the first rule of investing is diversification, right? Especially if you're a conservative value fund. Buffett, 40% in Apple? I'm sorry. Buffett's lost credibility. Buffett should have retired 20 years ago. A few years ago, he had 40% or more in Italy, right? His airline blunder. He bought the airlines. I mean, even idiots weren't going to buy the airlines when he bought them, right? And those of you who have read my fabulous book, you know one of the industries I said I would never to invest in is airlines. It's one of the worst. Everybody hear me? I think we lost connection here for a second. Everybody hear me? Yes, no? Everybody hear me? Okay. So think about it. Think about it for a second. If you're a credible investor, like a serious professional investor, and you think that there's an opportunity because the sector's down, are you going to buy like a bunch of the names? Or are you going to buy the one you think is the fundamentally best run company? Buffett bought the 3 big airlines because he's fucking clueless. Think about it. Think about it. Why would he buy 3 of them? It was a sector call, right? Shouldn't you focus on the one that you think is the best fundamentally out of all? Buying all 3 makes me realize it's obvious he doesn't fucking have a clue. Think about that. Right? Right? Now, you don't hear this. Folks, you don't hear any of these criticisms anywhere from anybody. That should tell you you're listening to the wrong fucking people. You're getting garbage insight, garbage information from a bunch of monkeys. Monkeys. Okay? To what extent Apple is a great company doesn't matter. That's beside the point. You don't have half of your fund in one stock. That's dangerous. And you know why? Because anything can happen. Tim Cook could have a heart attack and drop dead tomorrow. Right? Anything can happen. People invest in a fund because they want the diversification. That's one reason why. I've never seen, folks, this is just nonsense. It's insanity for Buffett. And it's not the first time. He's doing it through desperation. He had more than 40% of his investments in Berkshire were a handful of bank stocks not so long ago, about 3-4 years ago. You can look it up. This is major red flag. Okay? And in fact, if you take a look at Buffett's his bank stocks, he's with the worst ones. He's a clown. Wells Fargo? It's fucking garbage. Wells Fargo? Bank of America? What? That's the bottom of the bottom. JP Morgan's the best. Wells Fargo? Right? Right? Think about that. Think about that. And of course, airlines is a terrible industry to invest in. You can say, well, okay, it was an opportunity because it sold off. Well, what was not selling off during that time? Everything was selling off. Airlines is a terrible industry to invest in. The business dynamics suck. They're terrible. Similar to the automotive industry. The automotive industry is terrible to invest in, generally speaking. Now, by the way, I don't count the EV market as the automotive industry, FYI. That's basically government subsidized industry. Those are two terrible industries for many reasons. Okay? They're terrible. Automotive industry is very capital intensive, very risky, not great margins at all, subject to many regulatory issues depending upon the country. Airlines industry, you're not really building any equity, right? It's just basically like investing in a movie theater. You're collecting, revenues from ticket sales. You're not building. The only thing you're building is to some degree a brand, and that can be wiped out with a plane crash, right? Not to mention the fact that the airline industry is also government regulated. There's a lot of issues. You also have to deal with fuel prices, which can destroy your earnings. There's too many factors outside of the control of those industries, especially airline industry. That's why it's a bad industry, generally speaking. So think about that for a second. Think about that for a second. All these things with Buffett, right? It's terrible. Let's take a look at some more images here. You can see it's pretty detailed here. Probably can't see the print, so small. But you can see I've marked here where Buffett bought $3 billion in General Electric, and he sells the last portion here in General Electric. Basically where he bought it. Yeah, here you go. 2019, almost 50% of Buffett's Berkshire Hathaway held financial stocks during a period when the financial industry was underperforming other sectors. By the way, FYI. See this? Look at this, folks. When I don't mess around. See these annotated images here? I don't fuck around. FYI, right? These were done a couple of years ago. So why did Buffett take so long to sell some of his financials? Right? He took a long time. What did he do with the proceeds when he sold those financials in 2019? Or 2020? He bought gold stocks just when gold had peaked. Look into it, folks. That's window dressing. You see? Take a look. Take a look. So let's take a look here. Oh, let me go back and show. I'll go to the image now and show you. Here we go. So this is from 2003 to 2019. Let me pull up a. Okay, so 2021, 2020. So you can see Berkshire return in 2020 was 2.42%. S&P was 18.4%. S&P 21 was 28.71, and Berkshire was 29.57. So a small outperformance by Berkshire in 21, but they got blown away in 2020. And I just showed those 2 years to add to this figure here, so you'll get 20 years, right? So clearly, it's even worse because he got blown out relative to the S&P in 2020. Now, I don't know if you can read this, but so from 2003 to 2019, Berkshire returned an average of 10.85%. The S&P, with dividends added, returned 11.58%. Now, if you add 2020 and 2021, clearly, you're going to get a larger outperformance by the S&P. You can do the math and figure it out. But here's the point, folks. The point is that these are dividends added each year. They're not dividends reinvested. If you reinvest the dividends, and no one I've seen has done this chart. They always add the dividends. It's hard to even find somebody that even adds the dividends to calculate the total return of the S&P. But they only show each year. You need to show a chart of the dividends added to the S&P and reinvested every year so they compound. You're not getting the compounding effect here, you see. Yet Berkshire Hathaway is benefiting from reinvesting all the dividends it receives, and it's compounding. You understand? So the outperformance by the compared to the S&P is even much more. S&P has outperformed even much more than Berkshire Hathaway. Everybody understand that? Everybody get that? Once again, I showed you the chart earlier where his performance was decades ago, his major performance, and he's kind of coasted since that time. What happened, though, was the turn of the century, I believe, based upon what I know, and it's quite a bit actually about what happened in the U.S. Legal system, and I actually wrote about this in a couple of books, was that, you see, things change in the investment world. The investment landscape was changing in the 80s. And, of course, we had changes in the 90s with scam trade, free trade. So what happened basically was that as Japan was illegally engaging in unfair trade practices with the U.S., because Japan was the first country back in the 70s, began more problematic in the 80s. As they were doing this, Washington realized the need to protect intellectual property because we could not compete with the cheap labor. So if other countries were using our intellectual property and just opening up manufacturing, they would have an advantage from cheap labor. That's when intellectual property law ramped up, and the court system was became gradually much more aggressive in supporting intellectual property. This was a lot of things happened in the early 80s, and that just increased. Of course, today intellectual property law is out of control. It's too much, I think. So my point is that during this period prior to, and of course then you had free trade, which exacerbated the situation, right? Outsourcing, but by that time, intellectual property law was already firmly in place. It was just not being enforced as much in Asia at that time. My point is that America transitioned from a manufacturing-based economy to an innovation and intellectual property-based economy. That transition, when that transition was made, Warren Buffett was left in the cold. Why? Because that was the emergence of the technology revolution. And also, as the intellectual property law developed, it also recognized more and more other types of intangible assets that were not as easily recognized and quantified and enforced in the past. For instance, it's much easier to appreciate the value, the monetary value, the strategic value of patents, patent protection, patent law, right? Trade secret law. But something less obvious is brand, right? The company brand, and many other types of things. So my point is that, and I mentioned earlier, I don't think Warren Buffett really understands how to value and understands the true importance of intangible assets. And it goes beyond technology. Why? Why do I say that? It goes back to what I said earlier about McDonald's and Dairy Queen. Warren Buffett is too old school. His mentality is basically, oh, okay, McDonald's. Well, Dairy Queen. I think Dairy Queen's a better value because he does his traditional valuation bullshit, and he's looking at numbers. And he doesn't appreciate the fact that Dairy Queen is almost unrelated to McDonald's. Sure, they both are fast food. Sure, they both serve burgers and fries, right? But McDonald's isn't a burger company. McDonald's is much more than that. Much, much more. And much of what McDonald's is intangible assets. Not only the brand, the customer experience, the amazing, maybe the best market research in the world McDonald's has. They do a lot of things that makes them a successful business. Not a successful fast food restaurant. A successful business, man. People go to Dairy Queen to eat the food. People go to McDonald's for different reasons. It's similar to, and this, what McDonald's developed is kind of the role model of modern branding in America. Starbucks kind of copied it. All these companies are kind of copying it. And if you look at Starbucks, I mean, come on. People, they may say they go there for the coffee, but the coffee generally sucks. People go to Starbucks for the experience, whatever that may be, right? So that's branding. So Buffett doesn't understand this. This is my own personal opinion, and I think that I'm absolutely correct. And I will debate anybody with, professional, high-level credentials on this in the world, because I know I'm right. Take a look at the results. Since 2000, Buffett hasn't done well. Why? Because, and keep in mind, he would have done much, much worse if he didn't have his guy that's taken over, Abel. Abel has window dressed a lot of that portfolio, put a lot of tech stocks in there, right? Buffett would be in deep trouble if he hadn't allowed that to happen. So, if you look at, and I have, let me go ahead and show you. I've got a lot more on Buffett. Yeah, here's Occidental. Buffett starts buying Occidental in 2019 at $60. It collapses by almost 90% a year later. What are you hearing about Buffett? Buffett's doing well with Occidental. What a great play. You want to make money like Buffett? Right? You only hear about him adding more after the oil boom. You don't hear, you see, you're hearing all this, you're not hearing the full story. This is the media, folks. And by the way, I looked at Occidental. I wouldn't have touched it. It's fucking highly indebted, big problems. It was a major catastrophe. Only the high oil prices really saved Occidental. See, Occidental was in trouble. See? But you see, look at the article. Want to invest like Warren Buffett? It sells. Advertisement dollars. Here are the ins and outs of buying preferred stock. Warren Buffett's Shell oil investment could turn into another Kraft Heinz disaster. Of course, this is not going to be in the media. It's just like somebody that wrote this on their blog. You're not going to ever hear this in the media, right? And of course, Buffett gets all these sweet deals that you can't get. They're not accessible to you or I. Okay? So, that's right. Look, I mentioned this earlier, or maybe in the other stream, is that Warren Buffett's most vital investment tool is Geico. You'll understand that insurance companies, they put all their money in the stock market. Did you know that? Insurance premiums go into the stock market. Write it down. Now, none of these idiots on YouTube know this because they're fucking chumps. I'm a pro. I'm a world-class guy. How do you think you're hearing this from me? You're not hearing this. These guys don't know what the hell's going on. Folks, you don't understand the capital markets, how things operate. You're not going to have a clue. That's what I'm saying. These guys on YouTube are all frauds. They're all frauds. They need to shut their fucking mouths and get off YouTube. They're not qualified to talk about anything in the investment realm. And they're making money off it, which I deem as fraudulent. They're frauds. All of them. Now, the only exception, by the way, is the healthcare industry does not pile money into the stock market. They're not able to. They're not allowed to. They have to put their money into investment-grade bonds. FYI. How do I know this? By the way, because I was dealing with, personally, on Wall Street, I was dealing with one of the largest healthcare companies. And so, anyway. I mean, when you go down the list and just look at all the blunders Buffett made, I mean, and then you look at the performance, it should be clear to anyone who's looked at the data, looked at the facts. Remember, this is a guy, he's held to a high standard. The bar is very high for him. He's supposed to be the greatest investor. If that's the case, why is he making so many ridiculous mistakes? Right? How come he hasn't beat the S&P over the past 20 years? Even though Berkshire Hathaway is much higher risk than the S&P 500. Write that down. I'll say it again. Berkshire Hathaway is much higher risk than the S&P 500, and Berkshire Hathaway, the S&P 500 is not an appropriate benchmark for Berkshire Hathaway. But let me just get back to the point with Geico. Geico is the most important, most valuable tool, in my opinion. I mean, there's no correct answer, right? I mean, nobody knows. But I think if you ask Warren Buffett, he would tell you. It's the most important component, important tool of Berkshire Hathaway's Geico, because Geico provides a huge constant supply of cash flow to Berkshire Hathaway where he can dollar cost average. He can keep buying down stocks. Now he's got a lot of cash. He doesn't need that situation, but throughout history, that's what he's done. That's why he's needed all that cash. And in fact, another thing that Buffett is guilty of, because he's used to this period back in the early days where he bought Coca-Cola and he saw the company, the multinational branding. We didn't have this huge multinational branding situation decades ago, right? It's a different era. So Buffett just buys these companies and just holds them, and when things become a problem, Buffett just kind of, he stubbornly just holds them. He doesn't sell them. And the problem is that the media pumps Buffett out. They pump him up, and the media tells you to follow Buffett, to do what Buffett's doing. Well, guess what? You're going to do what Buffett's doing. You're not going to understand when you need to get the fuck out of IBM many years ago. Buffett lost his ass on IBM, and he didn't want to sell it. He only recently sold a lot of his Wells Fargo after all the scandals. He doesn't sell stocks. That's a problem. You need to know at some point when to get the fuck out. You see? There's just too many ways, there's too many examples. Buffett is absolutely not been a credible investor for the past several years, in my opinion. And I think the evidence is clear. And once again, he's a great investor. He's a credible investor. He has a great career. But the problem is the media is telling you he's the best investor ever. They're not telling you he's been a disaster, and I say disaster relative to, remember, the bar's raised very high for him. He's been a disaster past 20 years. Disaster. You don't hear that. And the reason why that's important is because the media is telling you he's the best. Listen to Buffett. Do what Buffett does. Really? Really? You go and buy the top 20 stocks on Berkshire Hathaway and tell me how you do. You're not going to get rich. Buffett got rich a long time ago. It's easy, much easier. And look, I understand the situation. If you made a lot of money a long time ago and you're getting a larger and larger fund, obviously it's more about wealth preservation. But the problem is that the media is not coming out and telling you both sides of the story so that everyone thinks that Buffett's an investment god and is flawless. That's the problem. And the reality is that Buffett ain't somebody I'm going to pay attention to. He's well past his day, well past his period. The market is much different today and has been for several years than it was decades ago when Buffett made most of his money in terms of the outperformance. And he also made most of that money in the private markets, right? And even today, he still has that tool. I mean, do you guys have a constant cash flow machine where you can buy stocks all the time? You can just keep lowering the amount, dollar cost average. That's what Buffett does. You don't have that tool. The S&P doesn't have that tool, does it? You see what I'm saying, folks? So when you look at things very closely, and most people aren't going to do this. Their attention span is shit. They're dumb. But it doesn't take a lot to follow my argument. But sadly, most people, well, on YouTube, you're not going to find hardly many people. They're just too fucking stupid. They're just going to take something out of context. You see? But I mean, these are the same people who are too stupid to realize if you're not doing this type of analysis, which is very basic, you have no fucking chance in hell to do well as an investor. Zero. Once again, folks, if you're not getting unique insight that can provide you with a sustainable competitive advantage, you're not going to beat the market. You're going to be on the dumb money. Show me somebody on YouTube who provides unique, high-level insight. Show me somebody. Please. There's nobody. Zero. I mean, just when I go over the fake investment gurus alone or go over Buffett, like I provide more unique insight, valuable insight, and I'm not even trying. Like I'm just going over these people. Right? You're learning more about the capital markets incidentally just from this stuff. Are you not? Of course you are. So anyone who, once again, you got to understand, Buffett is promoted as the investment god, the investment legend, the greatest investor. And the problem is, and of course the media does this because they want to sell more ads and more BS, right? No one criticizes Buffett. So what happens is that people follow Buffett. Oh, Buffett's buying this? Oh, okay. I'm going to buy it. Oh, Buffett's going to, and in fact, I pointed this out before on one of the research publications in the dividend research that we do. I actually had on that list Heinz. Okay, Heinz was on the list as a dividend stock. Very good dividend stock, conservative company, well-run company. I had never put Kraft on that list. You all know why? Anybody know why? Anybody? Let me, I'm going to find something here. Let me get something here real quick. Bear with me. Let's see. Oh, here we go. Okay. The reason why I never liked Kraft was because it was too much debt. Way too much debt. In fact, Kraft was spun off, I believe, from Philip Morris. And I was following it since I had a lot of debt. Didn't like it. I wrote an article, actually. I mentioned after the deal was done that they've overpaid. Overpaid. I knew it immediately. Think about this. I mean, why am I not the god in the media? Why isn't the media not celebrating me as the fucking god? I'm the investment god. Take a look. I immediately said it was a majorly overpaid for the deal. Right? I mean, I didn't even need to do any calculations or anything. I just looked at the basic numbers. It was obvious to me. It was majorly overpaid for the deal. But anyway. I mean, here you go. I mean, I've got a lot of charts on him to show you. Here's his airline call. March 2nd, Buffett adds Delta after it declined by 20%, raising his stake. Oh, he bought it before, I guess. Raising his stake to 11%. So I guess 11% of the company, I don't know. And he dumps it at a huge loss. I mean, what an idiot. Sorry. There's also his Teva call, by the way. Teva, scam pharmaceutical company out of Israel that steals intellectual property from U.S. pharmaceutical companies. That's right. Take a look. So there you have it, folks. But see, you're not going to hear this anywhere else because, I'm sure there are professionals that, it's professional tenured fund managers that know this, but they're not going to say anything. But outside of the professional investment world, you're not going to hear this because you're dealing with dildos. And what I've shown, though, is, think about it. Remember, this is the guy that is the greatest investor, right? And some of the mistakes he has made, many of the mistakes he has made over the past 10 years have been shocking. Shocking. Like, I would only think a clown like Whitney Tilson would make these mistakes. Remember Whitney Tilson? I'm going to expose more of him. This is the guy who went out, he had a hedge fund. The media promoted him as a genius, of course. Complete clown. This is a guy who, and I know his story very well because I was very, very bullish on Netflix for a very, very, very long time. And this is a guy that was going on CNBC, I don't know, 8 years ago, for many years, even before then, telling everyone he's shorting Netflix. He basically lost his hedge fund. He got blown out because he was shorting Netflix too many times. And now he's got these he's in the copywriting industry with all these bullshit videos telling you how he bought Netflix at $7. He doesn't tell you how, okay, I bought Apple at $1. I'm not going to tell you that I sold it at $2, right? That's what I'm saying about Whitney Tilson. Fucking lying. Deceptive piece of garbage. I'm saying the types of mistakes I've seen Warren Buffett make over the past several years would be something I would expect a clown like Whitney Tilson, who got blown out, to make. Buying the airlines, right, when he did. The Kraft Heinz deal, which he completely controlled that deal, right? So many other things. Lack of diversification, overconcentration, underperformance of the S&P over the past 20 years, even though Berkshire is more risky, much more risky than the S&P, and the S&P is not even an appropriate benchmark. Right? So, yeah, that's it. That's what Buffett, he dollar cost averages. That's what he does. And he can do that. You see, that's the thing. The media is not going to tell you. They're too stupid, of course, because they don't even understand this. They're too stupid to tell you, wait a second, what Buffett does, folks, I wrote about this in the preface of one of my books. What Buffett does doesn't matter to you for many reasons. Do you own a cash flow machine where you don't need to time anything? You don't need to worry about stock price? If you buy something too high, Buffett doesn't need to worry. Just keep buying it lower and lower. And by the way, his fund horizon is perpetual. There's no end life to Berkshire Hathaway. That's the mentality. That's the investment strategy, is based on a perpetual time horizon. Your time horizon is not perpetual. Are you going to live forever? Right? You understand what I'm saying? I mean, think about the people who piled in to Kraft Heinz when it was $90 a share. Like, I don't know, 6 years ago? Think about those people. When are they going to break even? Remember, we're not talking about high tech. Kraft Heinz, this is up Warren Buffett's expertise. This is value-oriented investment. Right? And he overpaid by $16 billion. Is that excusable? We're not talking about a small investment. Warren Buffett structured the fucking deal. Remember that, folks. He structured the fucking deal. He was the one involved. He structured the whole fucking deal. Think about that. Is that acceptable from the greatest investor? Or maybe he's not the greatest investor. Maybe he was the greatest investor before the turn of the century. I'll go with that. Right? But you're not hearing this from the media. They're not telling you this. Right? Warren Buffett's strategy doesn't apply to you. Warren Buffett can buy the airlines and watch them collapse and sell them and get out. You can't do that. It's going to hurt you. Right? You don't have a Geico pumping cash constantly where you can just dollar cost average all the way down, like all these guys on YouTube are doing. Oh, I love it. All these guys are doing the same thing. Paul, all these guys, I'm still buying it. I'm still buying it. I'm still buying it. Yeah, sure you are. Show us your fucking transactions. Shut up, liar. Right? No problem, Mr. Constantine. Isn't yeah, you might want to listen to the earlier when this is the recorded ones. I did a couple. So you all understand what I'm saying? It's all about context, right? If we're talking about a professional investor who the media is telling you is great, the bar is very high for that person. You understand? The bar is very high. So if I call Michael Burry a clown, he's a fucking clown. Does he know more than these YouTube guys? Of course he does. If I call Kathy Wood a clown, she's a clown. Why? Because she's promoted. She's a professional. She's promoted as an expert. The bar's set very high for her. Does she know a lot more than anybody on YouTube other than me? Of course. You understand. So it's all about perspective. You understand? It's all about where the bar is, where the bar has been set. The bar has been set very high for Warren Buffett. He's not allowed to make these types of mistakes he's been making, at least without a lot of scrutiny. And he has not gotten it. That's a big problem. You all understand what I'm saying? And of course, even that point I just mentioned is oblivious to most people. They don't understand the need to consider where the bar lies, right? Where the bar is set. And it goes, it's the same for everything. In fact, that's a legal issue as well, right? If you're a public figure, right? Then for somebody, you can trash a public figure and they don't really have much of a claim on you legally for defamation because they're a public figure. You see? If it's a private figure like myself, the bar's, well, I guess you consider it higher or lower. I guess you could consider it much, much higher. You see? You see? So, everything in context, folks. Everything in perspective. It's perspective is critical in everything. And especially in investments. Right? It's very important. So when I call some professional investor a clown, it's given the fact that the bar is set very high for that person. Because we're being told that person's a great investor and they're so great. Oh, really? Really? Right? And one thing I'll just go ahead and mention, I want to remind everybody, because people are continuously fooled by the media. And I know all their tricks. Don't forget, Kathy Wood was created by the media. And I told everybody before, I'll say it again. Here's how the media works. When somebody blows up, and people finally realize the person's a joke, then the media will come out and start to trash them. And then people will think, oh, yeah, the media is going after that person now. No, they're not. The media built that person up. Right? Even now, you've got people that claim that CNBC is going after Kathy Wood. No, they're not. No, they're not. They're still promoting her. You all just don't understand it. You don't realize it. They're giving her a platform. I mean, Kathy Wood should be crucified. Can you imagine me going up against Kathy Wood? I'd tear her apart, and it would be completely valid to do so. No one's tearing her apart. Oh, well, Kathy, how can you say that? That's not... What do you mean, how? Well, how can you say that Peloton is a great stock? So, Kathy, You don't know what you're talking about. You're completely oblivious, right? You see? That's what the media does, folks, because the media always gives you every scenario. They give you all sides. You know why? They give you every scenario, every side, because they know that people are dictated by confirmation bias. People see and hear and remember what they want to see and hear and remember. So if you realize Kathy Wood is a joke, then you're going to remember when CNBC says something about Kathy Wood not being so good, and you're going to exaggerate the meaning of that because of confirmation bias. But you're not going to remember that the media also said, "Oh, well, yeah, Kathy Wood, you're getting a lot of inflows. People believe in you. This and that." They're not going to believe this. They're not going to understand what's going on. The media, I'm telling you, I know exactly how they operate. All their little tricks and games. Speaking of that, so I'm going to go ahead and end this with Warren Buffett here. If you all didn't hear this, the ones that came in late, you may want to watch the stream early on. I think you'll understand. I'm correct on this. I've been talking about it for years now. Anybody who, and folks, even Jim Rogers. I told people about the recent story. I ran across a couple from Singapore recently. I was telling about Jim Rogers as a fucking clown. He's a joke. And he's a scammer. That's right, scammer. Why? Because Jim Rogers is deceiving people. He's making money off of deception. He's not disclosing things. And I explained to them everything about Jim Rogers, how he makes his money, really how he makes his money, and how his investment calls have been a joke, contrarian indicator. They found it hard to believe until I told them all these things. Then I told them why this is going on, why the media does this, so on and so on. They didn't understand this. And so when I started talking about Warren Buffett, of course, it was almost impossible. Because why? Because people don't sit down and look at things. Go through, and this is just some of the arguments on Warren. I didn't prepare for this, for Buffett. I just had some of the images that were done previously. I didn't prepare at all. Go through what I said about Buffett. Anyone who says, "Oh, Buffett, no, you don't know what you're talking about," they're a fucking stooge. Because they're just going by what they've been told by the media. I mean, you're gonna believe the media? Good luck. I mean, it's worse though. You have people that believe YouTubers. They believe things that these fucking YouTube scammers are saying. They're all fucking scammers. All these investment gurus on YouTube are scammers. Write it down. Fact. F-A-C-T. Fact. Not qualified to be talking about these things. Anyway, I'm going to end this, and I'm going to do one more. I'm going to do a little catching up with Everything Money, see what's going on with them, and maybe. I think I'm going to do maybe Everything Money and Scam Stefan. Everything Scammy and Scam Stefan. Yeah. So join me here in a minute, because you don't know when I'm going to be coming back. You never know. I'm enjoying myself too much.